On Tuesday, Bitcoin traded at $66,600, a 5 week high, up more than $2,000 in a single session. A good day for Bitcoin. The second largest corporate holder of Bitcoin on the planet hit the lowest price in its entire history the same afternoon, down 18% to $4.46. Same asset, same hours, opposite directions. And the man who built that company, one of the most recognizable Bitcoin evangelists alive, quit, walked away from 43,514 Bitcoin, told the board he could not run it anymore. Almost nobody is going to explain why, because the reason is not in the press release. The reason is two numbers sitting on the company's own investor page. Two numbers that describe the exact same share of stock. One of them is 47% smaller than the other, and both of them are true. I'm going to show you both. I caught the gap between the coin and the paper version of the coin the morning it happened, because I keep both on one screen. I'll show you where that lives in a few minutes. Jack Mallers resigned as chief executive of 21 Capital effective Monday. It was announced Tuesday morning. 21 is not a small operation. It trades on the New York Stock Exchange under the ticker XXI. It holds 43,514 Bitcoin, about $2.9 billion worth. Only Michael Saylor's company holds more. It is backed by Tether, the largest stablecoin issuer on Earth. When it launched, it had one stated purpose, and they printed it on the website: maximize Bitcoin per share. That was the whole promise. Not profits, not dividends, more Bitcoin behind every share you own. Same morning, a second announcement. The three-way merger, 21, Mahler's Payments Company strike, and a mining outfit called Electron Energy is dead. Called off. Strike walked. Mahler's own stated reason: irreconcilable differences with the board about strategy. He wanted a company that owned Bitcoin and ran businesses that generated cash. The board wanted the treasury. Now, that is where every headline stopped. Founder disagrees with board. That's a business page story, and it's boring, and it's wrong. Here's the part that matters. He wasn't losing an argument about strategy. He was losing an argument with arithmetic. And the arithmetic only breaks in one direction. To see it, you have to understand the machine these companies are built on. It's genuinely clever, and it's the most misunderstood thing in this market. Picture a barn. Inside the barn is $100 worth of hay. You own the only key. Now suppose people are so excited about hay that they'll pay you $200 for a copy of that key. So you sell a second key for $200, and you spend all $200 on more hay. Count it up. The barn now holds $300 of hay. There are two keys. Each key is worth $150. You started at 100. You're at 150. You didn't work. You didn't earn anything. You sold a piece of paper for more than the stuff behind it was worth, and you kept the difference. That is the Bitcoin Treasury Company. Exactly that. The barn is the Bitcoin. The keys are the shares. And when the stock trades above the value of the Bitcoin inside, every new share the company prints makes existing shareholders richer in Bitcoin terms. Print paper, buy Bitcoin, everybody's slice grows. For about 2 years, that machine ran beautifully. It is how Saylor got to 843,000 Bitcoin. It is why dozens of copycats appeared. And it is the entire reason 21 exists. There is just one condition. The machine only works while the paper is worth more than the Bitcoin behind it. That's it. That's the whole engine. Watch what happens when it isn't. Same barn, still $100 of hay, but the mood has turned, and now the market will only pay you $55 for a copy of the key. You sell it anyway. $55 spent on hay. Count it again. The barn holds $155 of hay. Two keys, $77.50 each. You started at 100. You're at $77.50. You bought more hay and you got poorer. Nobody stole from you. There was no fraud, no hack, no bad trade. You were robbed by arithmetic. That is precisely where 21 Capital is standing right now. The Bitcoin in that vault is worth about $2.9 billion. The market prices the entire company at $1.6 billion, 55 cents on the dollar. You can buy their Bitcoin through their stock for a 45% discount, and the market still says no thanks. So run the machine now. For every single dollar 21 raises by printing a share, it has to hand over about $1.80 of Bitcoin to do it. Every raise shrinks the Bitcoin behind the shares people already own. That is the disagreement. That is what Jack Mallers was arguing with his board about. He was not being difficult. He was standing in front of a machine that had reversed polarity, and the board wanted him to keep feeding it. He quit instead. That Bitcoin price I opened with is live on my macro command center at timtalksfinance.com/members. The actual coin, not a delayed quote on somebody's wrapper. And the free account sees the same screen I do. Now the two numbers I promised you. 21's entire pitch is Bitcoin per share. So here is Bitcoin per share, straight off their own investor page. Basic, 0.000126 Bitcoin per share. Fully diluted, 0.000067. Read those again. Same company, same day, same vault. The second number is 47% smaller than the first. The difference is shares that don't exist yet, but are already promised, already signed, already sitting in the paperwork, waiting to convert. 346 million shares today. About 649 million when everything that's owed comes due. So the company whose one job is to maximize the Bitcoin behind each share has already written the documents that cut the Bitcoin behind each share nearly in half. The vault does not grow. The claims on the vault do. And that is the sentence I want you to carry out of this video, because you have heard it before. You've been living inside it your whole adult life. A fixed amount of real value in the vault, an expanding number of paper claims on it. Nobody steals anything. The pile just gets divided more ways, quietly, on a schedule, until the thing you own buys less than it used to. That's the dollar. That has always been the dollar. It's what turned a 1970s salary into a joke. It's the reason a paid-off house and a full savings account still feel like they're losing a race you never agreed to enter. 21 Capital is that same machine, shrunk to the size of one company, running in fast forward, in public, with the receipts posted on its own website. And here's the part that should stop you cold. 21 is not the exception. Roughly 40% of the 100 largest Bitcoin treasury companies now trade below the value of the Bitcoin they hold. One of them shed 96% of its market value on the way down. Same setup, every time. Take the hardest money ever invented, wrap it in shares, and the shares are printable. Now, I want to be fair about the price because a lot of people are going to blame the price. Bitcoin is in the down year of its 4-year cycle. Every Bitcoiner knows that rhythm. The halving, the run, the top, the long grind. That's where we are, and 21's average cost is $84,865 a coin, against roughly $66,000. They're underwater about 21% on the Bitcoin itself. But look at what happened on Tuesday, because Tuesday settles it. Bitcoin went up. It had its best day in 5 weeks, and the wrapper hit an all-time low anyway. The coin is not what broke. The coin is doing exactly what the coin does. The paper wrapped around the coin is what broke. And it broke in the down year because the down year is the only time anybody finds out which one they actually own. So step back and ask the question underneath all of this. Why couldn't they just fix it? Any normal company in that spot has moves. Issue more stock. Do a deal. Merge with a miner, which is exactly what that abandoned three-way merger was. An attempt to bolt a cash-generating business onto the vault so the machine had a second gear. Every one of those moves has the same problem. They all end in printing more claims on a pile of Bitcoin that cannot get any bigger. Because there are 21 million Bitcoin. That's it. That's the whole supply, forever. Not 21 million until somebody votes. Not 21 million unless there's an emergency. 21 million, fixed. No servers, only a protocol, no board, no chairman, no man anywhere on Earth with the authority to make one more. That is the exact reason two smart men could not agree in that boardroom. In every other business, you grow by making more of something. In Bitcoin, there is nothing left to make. All the financial engineering in the world can move Bitcoin from one pocket to another. It cannot manufacture a single additional coin. So the only lever left was printing shares. And printing shares below the value of the vault takes Bitcoin away from the people who already trusted them. There was no third option. He quit because there was no third option. And this is where it lands, so let me say it plainly. They are going to tokenize everything. Your house, your bonds, your savings, your equities, all of it is being rebuilt on digital rails right now, in public, in legislation. And you will be offered a beautiful, regulated, professionally managed wrapper for every one of them. Every single one of those wrappers has an issuer. A tokenized bond has an issuer. A tokenized house has a registry. A stablecoin has a company. A dollar has a printer. A Bitcoin treasury company has a board that can print more shares while you sleep. Every exit they will offer you has a man attached who can make more of it. Bitcoin, the actual coin in your actual custody, is the only one that doesn't. 21 million. Fixed. Forever. No issuer. Two men in a boardroom just proved it the hard way. They had $2.9 billion of Bitcoin and every financial tool on Wall Street, and they still could not conjure one extra Satoshi. That's not a bug they hit. That's the feature you're buying. I don't do certainties here, only probabilities. Two things can happen. Either the wrapper trade recovers, these companies get their premium back, and the machine runs forward again, or it doesn't. The discount stays, and shareholders keep getting quietly divided while the Bitcoin sits in a vault they can't touch. I don't know which, nobody does. But in both of those futures, the 21 million never moves. The wrapper is the variable. The coin is the constant. Tuesday, the market told you which one it was pricing. Bitcoin up. The company holding the Bitcoin down 18% to the lowest price it has ever traded. If you own Bitcoin through something, that was the day to find out what that through costs you. I'm not telling you to do anything, that's just the math. And it's the same math whether the price goes up next week or down. Look at what you own and ask one question. Is there a man who can make more of it? Free, no credit card, about 2 minutes. Take the money quiz at timtalksfinance.com/members. You'll see the live Bitcoin price on the same screen I use, what inflation is actually costing your savings in dollars per year, and one move worth considering for your situation. I built it because I got tired of finding this stuff in footnotes at 6 in the morning, and you shouldn't have to figure it out alone. 21 million. That number is the entire argument. It always was.